Step onto the floor of modern microcap surveillance. Pull up your terminal and look at the ticker trading around the nickel mark, hovering roughly at 4.5 cents to 5 cents. To the mainstream financial media and to the algorithmic sentiment scrapers scanning social feeds, Nuburu, OTC Pink BURU, looks like yet another casualty of the post-SPAC graveyard. Headlines blare about NYSE American delisting notices, low single-digit millions in legacy trailing revenue, and a historical chart that resembles a sheer cliff drop from multi-dollar highs down to penny stock purgatory. Retail investors on Reddit and X scroll past the name, dismissing it as a dilutive, toxic note vehicle destined for the pink sheet shadows. But if you stop looking at the superficial price noise and instead look at the underlying physics and the structural pivot executed through mid-2026, you will realize the market is pricing a high-stakes multinational defense and photonics roll-up as if it were a bankrupt shell company. Here is the hidden structural reality that Wall Street's backward-looking models completely miss. Industrial metal fabrication and advanced defense engineering are undergoing a silent revolution governed entirely by the laws of optical physics. Traditional material processing has relied for decades on infrared lasers, wavelengths around 1060 nanometers. But when you try to weld highly reflective, high-value materials like copper, gold, or aluminum, the foundational plumbing of electric vehicle battery packs, high-density power electronics, and advanced aerospace systems, infrared light acts like a mirror. It reflects away, wasting energy, creating structural micro-fissures, and introducing catastrophic thermal bottlenecks. Nuburu solved this physics bottleneck years ago by mastering high-brightness, high-power blue laser technology, operating at a 450 nanometer wavelength. Copper and gold absorb blue light up to 20 times more efficiently than infrared light. This isn't just an incremental upgrade, it is a paradigm shift that eliminates spatter, allows for rapid, defect-free, high-speed welding, and enables three-dimensional additive manufacturing that was previously deemed physically impossible. But retail psychology is chronically trapped in lagging indicators. Traders see a price stock under 10 cents and assume the underlying enterprise is static, missing the massive structural metamorphosis that management, led by Executive Chairman Alessandro Zamboni, has engineered behind the scenes. While retail chat rooms argue about short-term volatility and past debt conversions, institutional insiders and strategic European partners have been quietly executing a multi-part consolidation of defense technology assets, turning a niche industrial laser pioneer into an integrated dual-use defense and photonics powerhouse. Market dynamics and institutional positioning. To understand how institutional heavyweights and specialized cross-border financiers play a stock like Nuburu, you have to look past the daily retail churn and examine the mechanics of corporate restructuring. Following a massive $38.0 million public offering executed in July 2026 at a significant premium to its prevailing market price, Nuburu did something that microcap management teams rarely pull off. It wiped out approximately $16.75 million in toxic debt in one fell swoop, fully retiring its lingering December 2025 debentures and convertible notes. For months, the stock had been trapped in a death spiral of monthly debt amortizations, equity line conversions, and forced selling that crushed retail morale. When a company carries heavy toxic debt, every minor retail rally gets met with an avalanche of newly issued shares hitting the bid as noteholders convert and liquidate. That structural overhang created the extreme downward pressure that forced the stock below compliance thresholds on the NYSE American. However, the July 2026 capital raise and subsequent debt annihilation severed that negative feedback loop. By extinguishing those debt instruments, management eliminated the mandatory monthly equity dilution that had been bleeding shareholder value. This dynamic sets up a classic institutional accumulation phase disguised as a beaten-down chart. While retail investors panic sell into the OTC transition, institutional sponsors and strategic stakeholders are positioning themselves for the next leg of the company's evolution. The balance sheet has been surgically restructured, pushing stockholders' equity back into positive territory, improving by roughly $17.4 million in a single quarter, while total assets expanded toward the $76 million mark through the systematic consolidation of high-value European engineering subsidiaries. Interactive check-in. How are you playing the microcap turnaround space right now? Are you exhausted by the constant dilution cycles of legacy penny stocks, or are you hunting for deep value special situations where massive debt cleanups have cleared the runway for actual operational growth? Drop your thoughts in the comments below. Business model and historical context. To view Nuburu merely as an embattled microcap hardware manufacturer is to misunderstand its entire operational DNA. The company's historical framing is anchored in its origins as a pioneer of industrial blue laser systems designed for high-precision welding of electric vehicle batteries, consumer electronics, and medical devices. While those commercial end markets remain vital, evidenced by active commercial trackers showcasing million-dollar customer pipelines and multi-kilowatt autonomous rover laser configurations, Nuburu's modern business model has evolved far beyond standalone factory hardware. Nuburu has systematically transformed into an integrated defense and security and photonics hub. Through a blitz of cross-border acquisitions and strategic partnerships executed throughout late 2025 and 2026, the company has integrated specialized European engineering firms that bring immediate operational revenue, software architecture, and defense-grade manufacturing capabilities into the fold. Lyocon SRLL is a specialized European blue laser engineering business that anchors the company's photonics and laser factory, driving direct product sales, professional services, and commercial pipeline visibility. Orbit SRLL is a critical infrastructure software and SaaS provider whose platforms supply hosted subscriptions and application maintenance services, shifting Nuburu's revenue mix towards recurring high-margin software streams. Tekne SPA is a premier Italian defense engineering and special mission vehicle manufacturer where Nuburu secured a 70% controlling interest backed by Italian Golden Power regulatory clearance. Tekne brings an enormous cumulative production value pipeline spanning hundreds of millions under Italian GAAP norms and heavy mobility assets capable of deploying advanced directed energy solutions. This triad of assets completely shatters the outdated consumer cycle or legacy industrial framing. Nuburu is no longer just selling individual laser heads to automotive factories, it is building a dual-use technology platform that fuses high-powered directed energy with specialized mobility, autonomous ground vehicles, UGVs, and software-orchestrated command and control systems. Future outlook, catalysts, and risks. Looking ahead across multi-year growth horizons, Nuburu's trajectory is defined by several massive operational catalysts and strategic gatekeeper positions. First is the commercialization of its directed energy and counter-UAV capabilities. Recent test campaigns conducted in Italy, specifically focusing on laser-dazzler counter-drone applications utilizing Tekne's vehicle integration platforms, demonstrate real-world validation for non-kinetic defense solutions. As global defense budgets increasingly prioritize modular, electronic warfare-resistant, and deployable counter-drone architectures, Nuburu's ability to mount multi-kilowatt blue laser configurations onto specialized tactical rovers places it directly at the intersection of modern military procurement. Second, the operational scaling of the Tekne and Orbit integrations provides a concrete path towards realizing the multi-million-dollar order portfolios and production value baselines outlined in management's compliance and business plans. The LaserTech business line continues to advance high-value customer quotations, such as multi-unit autonomous rover propulsion and laser integration projects, signaling that commercial demand for high-brightness blue laser tech is transitioning from R&D validation to repeatable deployment. Furthermore, management's stated intention to execute a reverse stock split to satisfy exchange compliance requirements and position the equity for a return to senior exchange listings represents a critical corporate governance milestone aimed at re-attracting institutional capital. However, investors must maintain a clear-eyed view of the risks. Executing cross-border integrations across Italy and the United States carries complex regulatory, cultural, and operational hurdles. While the crucial Italian Golden Power authorization has been successfully cleared for the Tekne transaction, managing multiple newly acquired subsidiaries while rebuilding balance sheet liquidity requires flawless execution. Additionally, microcap equities undergoing structural turnarounds experience heightened volatility, and any delays in converting the substantial commercial and defense quotation pipeline